So, have you noticed this? We're living through a really strange economic moment right now, in late 2025. It feels like Wall Street is throwing a massive party, while the rest of us on Main Street are kind of nervously looking at our budgets. It's a weird disconnect. So, what is actually going on here? All right, let's get into it.
I mean, it's truly a tale of two different economies living side by side. You've got the stock market shattering records, just soaring on this wave of pure investor optimism. And then, at the exact same time, you have consumer confidence, how regular people feel about their finances, and it is just stuck near rock bottom. It's a huge, glaring contradiction.
And that right there is the big question we're going to unpack. Why? Why is there this giant canyon between how Wall Street sees the world and the day-to-day reality for so many people? To figure it out, we've got to look at both sides of the story, starting with the celebration on Wall Street.
Okay, so let's put on our investor hats for a minute. The markets aren't just cheering for no reason. All that optimism is really a bet on the future, and it's being fueled by a couple of very specific, very powerful ideas about what's coming next. See, the number one thing you have to remember about investors is that they are always looking ahead. They're not trading on today's news, they're betting on tomorrow's. Right now, they're really hopeful that the Federal Reserve is about to start cutting interest rates, which would make it cheaper to borrow money and boost the economy. They also love what they call accommodative policies, which is really just a fancy way of the Fed signaling, hey, don't worry, we'll do what it takes to keep things humming. For Wall Street, all the signs are pointing toward a much brighter economic future.
But that's the view from the trading floor. Now let's step away from that and zoom in to the view from the kitchen table. Because for most households, the economic story feels completely different.
And this quote right here, it just hits the nail on the head. While Wall Street is busy forecasting 6 months from now, most people are just trying to deal with the here and now. And the here and now is the daily struggle with high prices for everything from milk to medicine. That's a constant pressure that some future market gain just doesn't fix today.
Yeah, this anxiety isn't just a vibe. It's rooted in very real financial pain. We keep hearing that the rate of inflation is slowing down, but that doesn't mean prices are actually falling. Not at all. It just means they're going up a little less quickly than before. But the price tag on groceries, gas, rent, it's all still way, way higher than it was a couple of years ago. Then you pile on the insane cost of housing and healthcare, and for a lot of folks, wages just haven't kept up. That is the squeeze that's crushing confidence.
So with these two completely opposite forces at play, how is anyone, especially an investor, supposed to figure out what to do? This isn't about picking a team. It's about trying to understand the whole messy picture.
And I think the big takeaway here, for anyone with money in the market, is that you can't just blindly ride the wave of optimism, but you also can't get paralyzed by the pessimism. This split-screen economy means you have to be a lot more thoughtful and strategic about your next move. So what does a strategic approach even look like? Well, here are a couple of ways to think about it. If you're leaning into Wall Street's optimism and you think the Fed's going to cut rates, you might look at sectors that are sensitive to interest rates. That's stuff like real estate or consumer discretionary, the non-essential fun stuff people buy when they feel good about their money, like a new car or a big vacation. But if you're more worried about Main Street's anxiety, you might take a defensive position. That means investing in consumer staples, the stuff people need no matter what, like food, medicine, and toiletries, which usually hold up better when the economy gets rocky.
But of course, no strategy is risk-free. With the stock market at all-time highs, you've got to wonder if things are just overvalued and due for a pullback. Your bond investments are also super sensitive to any surprises from the Fed. And if you invest internationally, a strong US dollar can actually hurt because any profits you make overseas are worth less when you convert them back to dollars. So this all leads us to the grand finale. What in the world happens next? How does this crazy disconnect actually get resolved? Well, the answer is probably going to come down to a few key things that, trust me, everyone is going to be watching like a hawk. First off, you need to understand this term, data-dependent approach. It sounds complicated, but it's not. This is the Fed's whole philosophy right now. It just means they have no preset plan. They're not following a map. They are literally just watching the latest economic numbers as they come in. Inflation, jobs, all of it. And they'll react on the fly. So what data should we be watching? There are 3 big ones. First, consumer spending. The numbers from holiday shopping in early next year will be a huge tell about how households are really doing. Second, keep an eye on fiscal policy. Any changes to taxes or government spending could be a real game changer. And finally, international trade, because disruptions in global supply chains can still have a massive impact on the price of pretty much everything.
When you boil it all down, what this all comes back to is a super delicate balancing act. You've got the Federal Reserve walking this incredibly thin tightrope, trying to keep the economy growing without letting inflation get out of control again, all while trying to manage the totally different realities of Wall Street and Main Street. And that leaves us with the one final massive question. Can they pull it off? Is this incredible tightrope walk going to land us in a stable, healthy economy for everybody? Or are we about to stumble into a whole new set of challenges? The numbers over the next few months are going to tell the whole story. Thanks for joining me.